Let me share an interesting data point with you. In 2022, 23 and 24, central banks bought over 1,000 tons of gold each year. In 2025, for the first 3 quarters, that number has been close to 600 crores. So central banks have been on a gold buying spree, and gold has actually delivered upwards of a 50% return this year and is close to the $4,000 per ounce mark. So why are central banks obsessed with gold? We're going to look at the top 3 reasons why central banks have been looking at gold as a great asset to have on their portfolio. Let's talk about the first reason, which is financial security. When Russia invaded Ukraine in 2022, a lot of central banks came to a rude awakening. What happened was the US didn't like this move that Russia made politically and decided that their response would be to freeze Russian assets. Now, typically, because a lot of global trade is denominated in dollars, plus it is considered to be the global reserve currency, many central banks end up holding dollars or dollar-based assets. So when this sanction on Russia occurred, a lot of central banks woke up to the fact that they may not have full financial control over their assets if their policies don't align with the US's. So this made them look for an alternative that could work and that was globally recognized regardless of who your trading partner was. So gold became a crucial asset for every central bank to have in an environment where they were uncertain about how their political relationships played out. This brings us to the second reason why central banks like gold, and that is inflation. So when we think about gold as an asset class, it's really difficult to value how much gold is worth, because think about it, it's not widely used by any industry, so supply and demand doesn't really affect it. It's mostly an ornamental metal. Beyond this, it doesn't generate cash flows and it doesn't have any financial properties, so to speak. So how do you value an asset like gold? It turns out that gold has the ability to retain purchasing power because gold does not depreciate in the long run, unlike currency or fiat-based currencies. So with gold's ability to hold on to purchasing power, what you want to do is you want to measure the value of gold in terms of other things that it can buy. So you want to look at the value of gold versus the number of dollars you could own, or the number of units in a particular equity index, or the amount of real estate you could buy with a certain volume of gold. So when you look at this relative valuation, gold retains that ability to purchase assets based on a fixed amount of gold. So this is one important reason that central banks tend to own gold when they're going through inflationary periods. If we've been paying any attention to how inflation has played out post the pandemic, you've had advanced economies deal with much higher levels of inflation than they've been used to in decades. This has been on the back of many factors, including logistical bottlenecks through the COVID period, as well as currency depreciation because of what's happened in terms of money printing to deal with the pandemic crisis. You've also had an era of tariffs and trade wars which have artificially inflated prices. So in this space, you've seen more pressure come in from different angles to push inflation up. For a central bank to combat inflation effectively, gold is a great hedge against inflation. And this could also be another driver why central banks have been buying gold in the last few years. This brings us to our third reason, which is asset allocation. Put quite simply, central banks tend to own assets in their local currencies. They also tend to own a good amount of dollars, and gold gives them the diversification against any local currency risks that they may be experiencing, as well as any risks that might arise from the dollar. This year, you've seen the dollar weaken almost 9%. If you measure how the DXY itself has moved through the year, you've seen a drop in the dollar valuation. This is unusual for the dollar index to have such a steep drop, and there are indications that maybe you're heading for a reversal in terms of dollar valuations as well. But in the meantime, central banks do need to hedge their portfolios. They need to have some level of diversification, which allows them to tide through any anomaly periods where gold can outperform other asset classes. So for central banks, gold seems to be a pretty solid asset class to own. It helps them diversify their portfolio, it helps them manage risks in uncertain times, and it protects them from geopolitical or other risks that may materialize at any point in time. It also creates a hedge against inflation, and it seems a pretty solid move for central banks to have shored up on gold over the last few years. If you learned something in this video, then show us some love by liking this video or sharing it with a friend who could also learn something today.